Hey, good morning, everybody. Today is Thursday, June 9th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning as we usually do with our Spectrum Analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 10 came from the precious metal minings industry, 6 came from medical devices, 5 came from application software, and rounding out the top 5, we had healthcare, steel producers, managed care, internet medicine, IT services, and healthcare facilities, all with 4 stocks each on the top 100 most powerful stocks in the most powerful industry groups. These may be good places to begin looking for leadership in this market, particularly in the steel industry. We've seen a lot of steel producers recently. Let's start today, as we usually do, with the Russell 2000. The Russell, after breaking out of this downtrend, has begun to develop quite a nice little uptrend. The Russell, I think, is the key to the market going forward here, and right now it is very, very strong. Yesterday, the Russell was up 8.98 points, or better than 0.75%. The Russell had a much better day than the NASDAQ or the S&P 500. Next area of significant resistance for the Russell is way up here in the 1205 area. And in order to get an idea of where that resistance comes from, I'm going to take a look at a longer chart. Generally, we look at 6-month charts, but let's extend this out to a year. And we see that this area of resistance that we're working on in the 1205 area is at this high from November of 2015. Notice that we have a long way to go after that area before we get to the old high in the Russell 2000, which we put in back in June of last year. We'll see if the Russell can take out resistance here in the 1205 area and move on to challenge resistance at the old high in the 1296 range. Let's see what the NASDAQ Composite's up to. But before we do that, stocks traded higher yesterday on heavier volume than the prior day. That's our definition of an accumulation day. An accumulation day is a trading session where either the S&P 500 or the NASDAQ trade higher on heavier trading volume than the prior day. Accumulation is a sign of buying by professional money managers and is bullish, particularly if we can string a few accumulation days together. Yesterday was a good day for the bulls, particularly in light of significant outperformance by small cap stocks. The NASDAQ has kind of tentatively bettered its April 19th high in the 49.69 area, but doesn't appear ready to hold that level yet. Meanwhile, the S&P also bettered significant resistance at its November 2015 high in the 2116 area. Distribution or professional selling is no longer a concern. Currently, both the NASDAQ and the S&P 500 have only 3 distribution days in the past month, and we've not added a distribution day in well over 2 weeks, although Investors.com awarded the S&P a stalling day earlier this week. Stalling is a form of distribution that requires an index to close higher, but at the bottom of its daily trading range on heavier volume. Unless it's egregious, we don't track stalling days. All that noted, the Investors.com market outlook is currently a confirmed uptrend in the market. Meanwhile, our market timing models on our most aggressive buy rating a margin signal. A margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Wednesday, advancing issues topped decliners by better than 2 to 1. New highs continued to handily outperform new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. Our Ramosi swing timing model is indicating an extremely overbought condition in the market. Keep in mind, an extremely overbought market can become severely overbought. For those of you that follow it, our RSI 10 strategy gave us a sell signal for clients with multiple purchases yesterday. We're still holding single buys. From a market perspective, our distribution count is not a concern. Our market timing model's on its most aggressive buy signal. Traders may want to be working toward fully invested at this point, but as always, keep your stops current and in place. Okay, yesterday, the NASDAQ was up 12.89 points, or just a little bit better than 0.25%. Remember, the Russell was up 0.75% yesterday. We closed at 49.74, just edging resistance here in the 49.69 area. Trading volume yesterday was actually below the prior day and was below average. For you followers of William O'Neill, we are in a confirmed uptrend on the NASDAQ and have been since February of this year. We have only 3 distribution days on the NASDAQ, and we haven't seen a distribution day in well over 2 weeks. Right now, the NASDAQ seems to be bracketed by support down here in the 4,900 area and resistance up here in the 5164 range. We have this long-term trend line that's a concern. That goes all the way back to the beginning of the bull market in 2009. This area of kind of minor resistance or support, I suppose at this point, since we've cleared that area, really isn't as much of a concern as the trend line is. I'd like to see the composite take out that trend line before we make an assault on 5164. As mentioned earlier, our market timing model is on our most aggressive signal, a margin signal, which indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested at this point. See what the S&P 500's up to. Before we look at the S&P, I want to go to a 1-year chart on the S&P 500 also. We generally look at 6-month charts. Let's take a look at a 1-year chart. Okay. Yesterday, the S&P 500 was up 6.99 points, or 1/3%. We closed at 2119.12, which is just above this area of support resistance in the 2116 range. The reason I wanted to go to a year chart is to show that this area of resistance goes all the way back to the November 2015 high right here. The fact that we've bettered that area of resistance puts the all-time high for the S&P 500 up here in the 2134 area in play. Yesterday, trading volume on the S&P was higher than the prior day, but was below average. We are in a confirmed uptrend on the S&P, have been since February, and we have only 3 distribution days, none of which have come in the past 2 weeks. Right now, our market timing model on the S&P 500 is on a margin signal. And the S&P appears to be bracketed by support down here in the 2044 range. Hopefully we won't go back and test that area. We have minor support at the 50-day moving average, worth keeping an eye on. And the next significant area of resistance is the old high up here in the 2134 range. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.